Well, we see that we're on pace right now to end yet another strong week. And coming into the week, one thing I talked about early Monday and Tuesday, from a technical perspective, the market being on the cusp. In fact, all your major averages breaking those major resistance points. Now, for the Dow, I think or thought it would be 2445. That was my magic number. And for the S&P 500, 2600. And then from there, 2,800. That's your final hurdle, technically, to retest the all-time high. Obviously, we're in the midst of a breakout or attempt to break out at this moment. Joining me now, Frances Newtown Stacy of Optimal Capital and a technical genius herself. What do you think about my numbers?
Thank you, Charles. Gosh, I hope I can live up to that expectation. So I think your numbers are great. I'm looking at a little bit of a longer-term perspective. Okay, so let's look at the Dow. The Dow has got to close above 25,000. That is a major hurdle, right? And then the Dow then has to go out and take out the previous high, which is about at 25,781. And I'll tell you why. We've had our fourth lower high. That's a very bearish formation. So from a technical perspective, we have to take out that high to change that pattern. So that's why 25,781 is very important. And the probability increases quite substantially if it can close above 25,000. So let's go over to the S&P 500. 2735 is the next point of resistance to get through, and that's just because that would be the lower high margin, right? If we were to continue in sort of a bearish technical formation. But if we want to take out that high, it's got to close above 2812. Above 2812 changes that formation from having those lower highs and is a very bullish signal, Charles.
Would either of those events be enough to maybe, through these key resistance points you just pointed out, would there be a high probable chance then that we retest the all-time highs?
Yes, actually, if we pull out of those, right, and all the technicians all over the place are going to see a change in that lower high, lower low bear type formation, I think you are going to see a lot of bullish technical activity from that. So I agree with you there. Now, whether or not that's sustainable, so let's just say the technical pattern is broken, is all about economic growth, economic data. Of course, the Fed has revised it lower to 2.6% for the fourth quarter in 2018. We're actually looking at 1.6% possibly for the GDP number at the end of the month, which is terrible, but that's what we're looking at. And then deceleration in inflation expectations. And the thing to watch there is the Treasury Inflation Protection Securities, or more commonly known as TIPS.
So which one then dictates more to you how you should be investing your money, how investors should be investing their money, what degree of cash they should be in? In other words, people always hear you buy on dips, or at least you buy low, sell high, except when the market goes low, almost every expert that I bring on says don't buy.
Right. So the ultimate determining factor from the technical perspective is if you have some more bad news or you have some economic numbers roll through that are below expectations, it's whether or not we take out this December low, obviously. Right now, we're looking at about a 50% retracement, right? And so we have some resistance at the 50% retracement. So if we can take that out, I would say just stay in. Keep an eye on the economic numbers. If the economic numbers start falling precipitously, get more defensive, go over to your fixed income, increase your cash. Otherwise, this market, from a technical perspective, if it breaks above those numbers, looks very bullish.
All right, and of course, if this runs out of steam, as you mentioned, perhaps a retesting of the recent lows. Frances, thank you very much. We appreciate it. And we have all these numbers. We record this, so we're going to
good.
We'll hold you accountable when you come back. Thanks a lot.